Open banking, once introduced as a revolution in banking by allowing for free movement of customer financial data, is currently one of the hottest topics in FinTech. Advocates say it could democratize data and fuel a FinTech revolution. But reality often fails to live up to its potential, as open banking has been received with an underwhelming adoption rate, non-cooperating banks, and unimpressed regulators. But why is open banking still struggling to take off despite its unlimited potential? Good morning, everyone. This is Mark for Payment Genes, and today it's all about payments. In essence, open banking is just enabling something electronically which was already possible before. Yet, the market doesn't seem too impressed. In the UK, there are only around 4 million users, which falls extremely short of the predictions to hit 33 million users by next year. Open banking can be key in unlocking huge opportunities. McKinsey, for instance, reports that open banking could contribute 1 to 1.5% of Europe's GDP by 2030. But it also found that only 10% of that value is unlockable today. In addition, Accenture reports that $416 billion in revenue might be unlocked within open banking's global market. Given open banking's potential, this is what experts have to say about the roadblocks standing in its way. First and foremost, data sharing needs to be standardized. Currently, there are thousands of banks in Europe, and each one has its own API. Open banking can be key in allowing apps to intercommunicate seamlessly by logging onto your bank app. Companies like InnoPay are working on standardizing data and facilitating more seamless data sharing. Open banking has received quite a backlash so far. It is clear that banks are uninterested to invest in promoting and fine-tuning an open banking offer, given that they are simply mandated to comply without profiting from open banking at the moment. Because sharing banking details is so counterintuitive to consumers, there is also an issue of data security here. Recent research revealed that 42% of US consumers are suspicious of how secure their shared data really is. We dedicated an entire episode just addressing consumer concerns with open banking recently. Hence, we highly recommend you to watch it if you want to learn more about this particular challenge. To conclude, we want to emphasize that despite its slow growth, open banking will inevitably become the new norm. As for banks' cooperation, we believe that once open finance is rolled out, banks will finally see the profitability of open banking and will therefore be more eager to attract consumers to new open banking solutions. Finally, are you comfortable with sharing your banking details with third parties as well? Let us know your take on this one. But before you go, we want to let you know that our colleague Sonia from Payment Genes Consultancy just organized a roundtable to tackle payment sustainability and mobility. So if you are interested in this topic, don't miss out on this roundtable and register at the link below. For now, I'd like to thank you all again for watching. I'm looking forward to see you again next week. Cheers, bye-bye!